is 8/28/2024, and we have NVDA earnings. Okay, so I just wanted to do some technical analysis and come up with an earnings trade for this. So let's look at it. Okay, I'm just saying that NVDA's low for January 2024 was somewhere around $47. So if I take a fib extension all the way from there to this 140 high to this recent 90 low, right? I get an extension, 50% extension as 137.41 and 61.8 extension at 148.44. So I'm like, okay, we can easily get to this 150 level by year end. Okay, even if it has to have a pullback now because of earnings or anything, by year end I'm thinking we can get to this 150 level in NVDA. So now I have earnings, I have stock that I need to protect, but I want to still participate in the upside if it happens. So how I plan to do is I want to go all the way to February 2025. Why do I want to go all the way there? Because of the fact that we have election coming. Volatility may come not because of NVIDIA, because of something else also that is possible, right? So because of all that, I just want to be clear of all this and either go to December, January, or February. And I was looking at January 2025. The difference is not much, less than $5. Why not give yourself another 30 days? If you can get $5 by paying $5, you can get the same exposure, right? So that's why I am looking at doing this 135 150 call debit spread for February 2025 with, okay, if I do this, you can see that you are paying around 490, right? I'm going to be trying and going to fill it for 480. Now this means that around $490 I'm paying to be part of the upside if it gets close to 150. Okay. The $15 call debit spread means that it is as good as saying I am buying at 135 and willing to sell at 150. So if by February Nvidia goes over 150, that means I bought it at 135 and I'm willing to sell at 150. I am getting $15 per $15 per share profit, right? And when we talk about contracts here, right? So the 15, each contract has 100 shares. It controls 100 shares. That means I'm looking at $1,500 profit for this trade, and I am paying around $490 for it. Okay. So in terms of risk reward, I have 1:3 risk reward is there. Okay. I'm paying 1 to potentially make 3. Risk reward is there. I am giving myself ample time. I am away from the election choppiness if need be, or down move need be. So that way, in terms of the call debit spread, I am giving itself everything that it needs. Okay. Now, what about how do I protect if it goes down, right? If NVIDIA goes down, how do I protect myself? So now for that, if you look at it, there is something called as NVDQ, which is a 2x leveraged ETF. What does that mean? That if NVIDIA goes up 1%, okay, NVDQ will go down 2%. Okay, now I have stock that I need to protect. So if NVIDIA goes down, I want this will go up. NVDQ will go up. NVDA goes down 1%, NVDQ will go up 2%. Okay, so this is what I am going to protect my stock against. I am looking to buy short term. I'm not looking to buy only for earnings, right? So I'm planning to buy this $6 call. Okay, why am I $6 call? Because this will go up if Nvidia goes down. So I can buy this for around 35 cents over here. Okay, so I will buy a couple of contracts here to protect my stock, and in the meantime do that. Now I'm buying NVDA February 2025. What if it goes to 150 today itself, right, on earnings? then tomorrow whatever profit I can get on that February, it's not going to be, because you're talking about till February expiration, it has to be above 150. If it does now, I by tomorrow I can make a double or anything and I can get out. I can reconfigure it later in a different manner, but if it goes up, I will make money. If it goes down, I have given myself ample time and I have protected myself. So that's how I'm willing to trade NVIDIA. Today is 8/28/2024. Let's see how NVIDIA reacts. See you guys.